investment insight series, Magellan Minutes, in which our investment team dissect the markets and take a deeper look into sectors and stocks in our global portfolios. My name is Jennifer Herbert, Key Account Manager at Magellan, and over the next 10 minutes, I'll be talking to Magellan's Head of Research, Vihari Ross, about our current luxury goods exposure. Thanks for joining us, Vihari.
Thanks, Jen. It's a pleasure.
Vihari, the Magellan Global Fund includes two luxury companies, which are LVMH from France and Estée Lauder from the US. It's a very interesting time for luxury. How have these stocks fared?
It's been an interesting time for sure, and quite an unprecedented time for investors in terms of not only the lockdown, but the recession that we'll find ourselves in when we come out of our houses eventually. The prospects for Estée and LVMH have been very much linked to the China story. And so the share prices actually started to turn in mid-January when, murmurs of the virus first hit the newsreels. And we had much less inkling about how bad COVID-19 would turn out to be. And so the companies, compared to the rest of the market, actually started turning down a month prior. And so since that middle of January to middle of March, which was sort of the most recent bottom, both Estée Lauder and LVMH fell by 34%. Since then, we've had, about a 20% rally in both, and they're both down about 23% today.
And what has been baked into that, do you think?
Well, Jen, what it really reflects is that Chinese consumer being so important, but also the importance of travel to the luxury industry. So 40% of luxury spend actually takes place when people are traveling overseas, and 10 to 15% of that spend actually happens in the airports themselves. So for Estée Lauder, 23% of their global sales happen within an airport. Then you've got limitations, in manufacturing in Italy being closed. You've got the reduced wealth effect, the feel-good factor, from share markets falling and things like that are impacting the sector. So we've had this rally that I described thanks to that, sugar hit from monetary stimulus and fiscal stimulus that's being thrown at the problem. But the reality is that the impact of both the shutdown, the impact on travel, and the recession that will follow really does have an outsized impact on these businesses.
We're assuming a significant change in consumer behaviour post-COVID-19. What do you expect the recovery to look like for these businesses?
So this is a really interesting question. And I think it's important to separate out the impact of the lockdown versus the impact of the inevitable recession that's going to follow. And, currently our view is that the recovery in developed markets won't be a V. It'll take longer than that. And how long it's going to take is really uncertain. And no one really knows yet what it's going to look like. But when we do think about the recovery, there's a few important things to think about and note. The first is that the Chinese growth story still exists. Given what the government can do, mandatory tracing apps, mandatory lockdowns, etc., the recovery there is likely going to be sooner and stronger, in our view, than the rest of the world. And that is super important for Estée Lauder and LVMH because 1/3 of everything they sell is to the Chinese consumer. And that is set to grow to being more than half of their sales in the coming years. So that tailwind of urbanization, that tailwind of the growing affluent class and rising disposable incomes will still be there following the pandemic. The second thing is that this pandemic is really accelerating a lot of the things and trends that were already in place around the world before this virus started. So here I'm talking about things like the increasing portion of sales coming from the Chinese consumer, the Chinese spending more of their money at home rather than abroad, the rise of digital sales, selling stuff online is becoming increasingly important. And so businesses like Sephora, which is owned by LVMH, as well as, Estée Lauder's substantial business that they have on Alibaba's Tmall platform, actually has put them in very good stead in this crisis. And in the same breath, there's this demise of the department store, the wholesale channel for luxury is really accelerating. And that's 45% of Estée Lauder's business in the US. So that decline is accelerating as well. it makes sense for a brand that has closed all of its stores around the world to rethink, which ones do they actually want to reopen again. And that's especially in the context of the online business increasing, in some cases at triple digit rates. The other trends that might accelerate are things like casualization, which means, wearing athletic wear and sneakers, the self-care trend, so people are buying more skincare, while they're in quarantine, and also sustainability, so more eco-conscious consumption. And in that vein, the resale market in luxury is actually seeing a lot of interest at the moment as well. So you might expect brands to look to try and reclaim control of that sector for themselves in future. And the third thing really to think about in terms of a recovery and what we're looking out for is the desire still going to be there? This is something that people want, not need. These are brands that have lasted the test of time, and it's human nature to desire these products. And what you've seen in past downturns is that the best brands tend to win in that environment, because people want to buy things that will truly last the test of time, rather than something that's more fashion oriented or edgy in this environment.
And Vihari, what signs have you actually seen in terms of consumer demand?
Well, obviously the thing that's missing right at the moment is the occasion. No one's able to go out anywhere. But despite that, what you've seen, for example, is quite substantial, demand, percolating, in parts of the world. There were news reports that when the Hermes store, reopened in Shenzhen recently, they made, $3 million worth of sales on that first day. And that's almost 20% of their typical store's annual takings, in one day. We've seen companies like Vestiaire Collective, which is a community of secondhand buyers and sellers of luxury, see 20 to 30% growth year over year, despite the existence of COVID-19. And those anecdotes, along with, other data that we look at, gives me a lot of comfort, because you can see that the consumer demand, underlying all of this uncertainty in the short term is still there. And that's a key factor in really working out, what the recovery does actually look like for these companies. But the thing to remember is, despite these examples and the fact that people, will ultimately come back to some form of spending on luxury, you do need to temper that a bit, because you don't necessarily make up for sales that you lost today. And by that I mean, just because you don't buy a new dress or lipstick this year, that doesn't necessarily mean that you will go and buy two of them the following year. The sales that would have happened this year, are simply lost to those companies.
Both companies have now reported. Can you give us some color on the valuation and price?
Yep, so the results over the last quarter were largely as we expected them to be, given how economically sensitive they are. But of course, the worst is yet to come in the period after the one that we've just seen, which is this April, May, June period, where most of the world was locked down. So January we saw was really strong, which was pre the virus hitting. February was hurt by China, because that's when they were hit by the virus. And then we had severe declines outside of China in March, with stores closed, travel stopping. So we ended up with a sales decline of 9% for Estée Lauder and 17% for LVMH in that first quarter. But even Coca-Cola had a 25% volume decline over that quarter. So it really has been quite indiscriminate in terms of the impact. And both Vuitton and Estée have seen a real acceleration in their Chinese consumer spend at home. It's still negative overall because people aren't traveling, but LVMH said, for example, that its sales within China for its largest brands were up 50% in April year over year. So there's that pent-up demand story again. And e-commerce is really showing itself to be a big driver of that acceleration. So the shares have rallied. There's a bunch of bad news still to come. The costs of getting supplies out there and fulfilling online orders is going up. So there's an incredible short-term uncertainty to contend with, and questions around how long this is all going to take to recover. But we remain confident in the quality of these businesses. And beyond that, their management capability, the demand for their products, and the importance of China to that growth story as well. So pulling all of that together, despite the obvious short-term risks, we do see value in these stocks today.
Vihari, thank you so much for your insights. If you have any questions, please don't hesitate to contact one of the Magellan team, and please feel free to share this update with clients or colleagues as you see fit. Take care and stay safe.